When clients ask whether they'll owe capital gains tax on the sale of their home in Arizona, the correct answer lies primarily in federal tax law, but with relevant state implications. Arizona does not provide a separate state-level capital gains exemption for residential real estate. Instead, the common exemption arises from the federal home sale exclusion under IRC Section 121, which many Arizona homeowners may qualify for, thereby reducing or eliminating federal capital gains. That exclusion is the de facto exemption most sellers rely upon. Knowledge of how that federal exclusion works and how Arizona treats capital gains is essential for a competent Arizona licensee advising clients. Under Internal Revenue Code, Section 121, a homeowner may exclude up to $250,000 of capital gain from the sale of their primary residence if filing singly, or up to $500,000 if married and filing jointly, provided certain qualifications are met. The requirements include an ownership test and a use test. The taxpayer must have owned the home and used it as their principal residence for at least 2 of the 5 years preceding the sale. In addition, the homeowner must not have used the exclusion on another home in the prior 2 years. For example, if a married couple in Phoenix sells their home after owning and living in it for 3 years, and their gain from the sale is $450,000, they might exclude all or part of that gain under the $500,000 exclusion, avoiding federal taxes on that portion. In Arizona, however, since capital gains are treated as part of state taxable income, i.e., Arizona does not distinguish capital gains from other income, the excluded gain under the federal law would not be reported as taxable at the state level either. If a taxpayer fails to meet the 2-year requirement, a partial exclusion may be available under certain circumstances, such as job relocation, health issues, or change in employment, provided specific conditions are met. It is essential for licensees to caution clients that those partial exclusions are more complex and often require consultation with a tax advisor. Remember, you are not a tax professional, so point them in that direction. Because Arizona has no separate capital gains tax regime, capital gains are simply included in Arizona's taxable income. Licensees should focus on helping clients maximize their federal exclusion eligibility. Also, for investment or rental properties, i.e., non-primary residences, the 121 exclusion does not apply, which means clients may owe both federal and state tax on the full gain after depreciation recapture, unless they employ deferral strategies such as 1031 exchanges. Review. Summary: Arizona itself does not offer a standalone residential capital gains exemption. The common exemption originates from a federal exclusion, IRC Section 121. Homeowners may exclude up to $250,000 single or $500,000 married filing jointly from federal capital gains if they satisfy the ownership and use tests 2 of the past 5 years and have not used the exclusion on another home within 2 years. Arizona taxes capital gains as ordinary income, so the excluded portion under federal law typically will not be subject to state tax. The exclusion does not apply to properties not used as a primary residence. Such transactions may incur full capital gains taxation unless deferral strategies, e.g., 1031, are used. Discussion prompts. Why do most Arizona homeowners rely on the federal home sale exclusion rather than a state-level exemption? Answer: because Arizona treats capital gains as part of ordinary income, it does not provide a separate exemption. The federal exclusion under IRC Section 121 is the mechanism that reduces taxable gain. What 2 tests must a seller satisfy to qualify for the full home sale exclusion? Answer: the ownership test, owned the home for at least 2 years, and the use test, used it as a principal residence for at least 2 of the past 5 years. Under what circumstances might a seller qualify for a partial exclusion? Answer: when the seller's inability to meet the 2-year rule results from qualifying events like job relocation, health issues, or unforeseen circumstances. Closing remarks. While Arizona does not maintain a separate capital gains exemption for residential real estate, the federal exclusion provides significant relief to many home sellers. A thorough understanding of eligibility criteria and limitations is paramount to advising clients correctly. Licensees must know when the exclusion applies, when it does not, and when to encourage clients to seek specialized tax counsel. In real estate practice, sound knowledge of tax implications is as essential as understanding contracts, disclosures, and closing procedures.